Alright, so I already have seen this one. The jobs report disaster. Fed forced to cut interest rates. But I feel like it's important enough where I want to double check on it, and I feel as though it is becoming so important to kind of highlight how scumbaggy these people are. None of this makes sense. They've added so many variables that it is now controllable. So they can basically do whatever they want with the market, and we are at their whims because I don't know.
Jobs report was released this morning for the month of July, and the results were bad. I mean, it was worse than bad. It was terrible. Not only did the results come in below expectations, but the report says that they overcalculated the amount of jobs that were created in May and June by 258,000 jobs. Okay, so in the month of May, the US government reported that the labor market added 144,000 jobs, but in fact, it was only 19,000.
One tenth of what they said it was. And we still look to these people to do anything. I don't know. I am baffled, but then at the same time, it's like, after you're baffled 30 times, can you be baffled 30 once? I guess you could, but yeah.
They reported that in June, the labor market added 147,000 jobs, but in fact, it was only 14,000. Okay, now let's cover the jobs report for the month of July. So for the month of July, the US labor market added a net 73,000 jobs, and this came in well below expectations. It was ranging from 110,000 jobs to be added all the way up to 140,000. And I just want you to keep this in mind, that I expect, and probably so many other people, that this July figure, like the 73,000 jobs added, it's probably going to be revised downward and heavily. It could even be negative. So we are clearly on a downward path, and the labor market is weakening.
Because they want the labor market to be weakened. It's been weak for a while. That's another thing. They have so many variables that they can make it look a certain way, but it's really not. So I think the labor market has been very, very weak. But of course, they're not going to say that. They have too many incentives. But now that they're ready to lower interest rates and pump a bunch of money into the market, they will show what they need to show.
And the unemployment rate increased from 4.1% in June to 4.2% in July. And as you can see, it's steadily been rising since 2023. Now, when you look at wage growth, as you can see, the rate of wage growth has been declining since 2022. So for the month of July, it came in at 3.9%. So it was education and health services that added the most jobs in the month of July, coming in at 79,000 jobs created. Okay, but if you look at manufacturing, this sector lost 11,000 jobs in July. And I just want to say that the whole point of tariffs is to create a manufacturing revival and boom. But
Yeah, you notice how a lot of the stuff that has grown is kind of fluff. I mean, not construction and maybe other services, and I guess some of this, but this isn't all those jobs that are created. It's not real. Probably a lot of these jobs are just fluff, where I think he's gonna say this in the video, where it's like people just getting 2 jobs or something. You know, like, I don't know.
But that is clearly not happening. Now, I know that some people are going to say that it's going to take years for that to happen, this manufacturing revival and job creation in that sector. Okay, but if that's true, then perhaps it's going to take many more years of job losses for that to pan out. Now, I want to show you the Doge effect on the federal workforce. For the month of July, federal government employees fell by 12,000. Since January of this year, the federal workforce has shrank by 84,000. So yes, that is a lot. However, I just want to put that into context. The US government has approximately 3 million civilian workers. Now, before I show you the reactions to this jobs report, I want to show you the most recent Challenger report that came out on July 31st, which covers layoffs. Okay, so here are the industries that have seen the largest amount of job cuts in 2025 so far. Governmental jobs have experienced the most cuts. So far in 2025, there have been 292,000 job cuts. However, it is the wide belief that there's going to be many more to come because some of those cuts have been delayed due to legal issues. So the technology sector has seen 89,000 job cuts this year. So that's a 36% increase compared to the same time covered in 2024.
I'm just saying this now. What I believe, I feel we'll probably get a stimulus check and some type of thing where people will get money like given to them. Maybe if they have a job or something, or I don't know, or maybe if they don't have a job. It won't be much, but I feel like probably like $100, $200 a month, and it'll basically, I don't know. They're gonna have to do some type of universal income because nobody's gonna be able to handle all this. People are already losing everything, and they just keep raising the prices, and it's like, okay, we'll see how this goes.
And in the retail sector, there's been 80,000 job cuts this year. So that's up 249% compared to the same time last year. Okay, so what is driving these job cuts? So it's actually a variety of reasons. DOGE is the primary driver of the governmental job losses within the federal workforce, so that should be no surprise. And then you have market and economic conditions that were cited by many employers as the reason for the job cuts. So this simply means a weakening economy and issues related to inflation, economic uncertainty, among other things. So employers cited this as the reason for more than 171,000 job cuts this year. And then you have closings being another big driver of job losses. So this is simply when companies go bankrupt or they restructure. So this has led to more than 120,000 job cuts this year. And you also have technological updates. So employers have cited automation and AI implementation as the reason for more than 20,000 job cuts in 2025.
I really was just thinking about this too as well. So I currently work at Walmart, nothing crazy. I also noticed there is it's like a mod team or something. Either way, they changed like the labelings and the stickers and stuff. And I heard about something where they're going to get digital price tags now or something, or in the future possibly. And I think one of my coworkers was saying how she believes it's going to be like prices are going to go up and down and all this other bull crap. And honestly, I was like, that it sounds sick, but it's honestly probably what they're going to do. Like you may go somewhere and it'll be 20 cents up or 15 cents down or something. And I don't know, it's going to be exhausting, but I think that's the new wave.
All right, now let's break this down by regions. So what part of the country is getting hit the hardest? It's clearly the East Coast because of the job losses at the federal workforce. So job cuts have risen by 219% on the East Coast compared to last year. Now in the Midwest, it's definitely not as bad. Job cuts have increased by 8.7% compared to last year in the Midwest. In the West, job cuts have risen by 11% compared to last year. And in the South, job cuts are up by 34% compared to last year. Okay, now I want to show you how this jobs report was received. But first, I want to show you this video clip of Jay Powell, who's the chair of the Federal Reserve. And he expresses his opinion that the labor market is solid. But this is before today's report was released. So please take a look.
The labor market data we still think is, continue to think is the best data we have on the economy. And that shows a 4.1% unemployment rate. It shows wages, still at a healthy level, but moving ever closer to what we would regard as long-run sustainable, consistent with longer-run productivity and 2% inflation. So the labor market is actually still quite solid.
Okay, now I want to show you this video clip of Jay Powell saying that the main data point that he's going to be looking for in today's report is going to be the unemployment rates. And this is so important because this is what this is a big part of what he's using to determine whether to cut interest rates or not.
I can't even blame him because, he has no control over this. There is somebody, pulling the strings and telling him what to do. But it's like, dude, come on, man. I don't know I'm telling you, man, they just don't want anybody to have any money.
So please take a look.
On labor, given the fluid labor supply situation, is there a number for this jobs report we get on Friday that would look to you like equilibrium job growth?
You know, the main number you have to look at now is the unemployment rate, because if it's true that the demand for workers in the form of, let's call it, just say payroll jobs, that number has come down, but so has the break-even number.
Okay, now with that in mind, here's how the market reacted. So before this jobs report, the market expectation, and this is according to the CME Fed Watch tool, was that there was a 41.3% chance that the Federal Reserve will cut interest rates at their next meeting in September. Now, after this report, the odds of an interest rate cut in September have jumped up from that 41.3% to now 82.8%. So that's because the jobs report shows that the labor market is much weaker than believed for May and for June, and it came in well below expectations for July. And the unemployment rates went up. So basically, the Federal Reserve is being put in a position where they're going to have to lower interest rates to save the labor market, because that is a part of their dual mandate. Okay, so what does that mean? Ultimately, it means that there's going to be more easy money on the way. And rate cuts, they're shortly going to be followed by quantitative easing, which means more money printing.
Yeah, I agree. More money printing will definitely be happening. We just gotta hold on tight. I've been extremely exhausted in the market myself. As you know, this is a crypto channel, even though I talk about a lot of other stuff. But basically, just buy assets. Lower your bills. Nothing crazy. It's literally impossible, but it's all we got for now, at least, until they start giving out stimulus moolah. Deuce.